US equity markets were mixed overnight after recording gains 3 out of the last 4 weeks. McDonald's shares were up 2.2% overnight after same-store sales increased by 4% through the month of February. McDonald's have seen pretty good growth coming out of Asia and the Middle East, where these areas have increased by 10% over the past month. Back home in the US market is still fairly weak, with sales only increasing marginally through this past month. This is reflected in fairly weak demand coming out of the US. US imported beef prices have been strong recently, but this is more of a factor of low supply as opposed to good demand. The New Zealand dollar has been trading back over 70 cents against the US dollar over the past 24 hours. It is likely to trade in a fairly tight range this week as investors wait to see what the Reserve Bank of New Zealand will do with the official cash rate and with their quarterly monetary policy statement. These are due out on Thursday, and we don't expect to see any major shocks. The Reserve Bank have been using words such as comfortable, and this is reinforced by some of the data that has been coming out over the past few months. Inflationary pressures seem to be fairly subdued. The sting is coming out of the housing market, and lending growth is also fairly flat. New Zealand's economic recovery has not been quite as strong as previously thought, and this means that there is little incentive to increase the cash rate just yet. We are picking for increases to start in June of this year. Overseas demand for lamb still seems to be very good, and it is not only coming from our traditional markets, but also other markets such as the US and Middle East seem to be getting in on the action. This is good news for local farmers, as they have been seeing schedule prices increase recently. Supply is well back, and this is keeping procurement very tight at the moment. This has been one reason why schedule prices have been increasing. Looking down the track, the currency is going to continue to be a problem. If the procurement pressure does come off, this is likely to mean we will see some easing in schedule prices.